For quite possibly the last time for some time, happy Co-op Month. Welcome to our presentation on making cooperatives work with the Rocky Mountain Farmers Union Cooperative Development Center. My name is Charlie Michael, and I'm the Education and Outreach Coordinator at National Farmers Union. Joining me today from our office here in the heart of the nation's capital is NFU's Senior Director of Education and Programming, Emma Lindberg. This is the final webinar in a three-part series that we've hosted this Co-op Month. If you weren't able to join for the prior two, they're not to be missed. Links for both recordings are in the chat now, and after we wrap up today, I'll send out a link to a playlist with all three. Please use the chat to connect with us and each other throughout the hour. In the spirit of Halloween, our icebreaker today is: which figure from cooperative history do you most wish you could speak to from beyond the grave? My pick would be Moses Cody of the Antigonish movement. There's a link in the chat now if you'd like to read more about that. As usual, we've set aside time for questions following the presentation. If one comes to mind, post it in the Q&A, which you can access by clicking the icon at the bottom of your screen. We wouldn't be meeting our obligations under the 5th cooperative principle if our education, training, and information wasn't accessible. That's why we offer captioning and share a recording and transcript after each of our webinars. You can click the live transcript icon to activate on-screen captions, and if you prefer to view real-time transcription in a separate window, there's a stream text link in the chat, which you can paste into your web browser's address bar. At the conclusion of today's session, we'll post a link to an evaluation where you can share your thoughts on the presentation and note any questions that we couldn't get to. We'll do our best to follow up on those. We're interested in learning more about your involvement in cooperatives. I'm sure that many of you tuning in today have already taken the survey, but if you haven't, it's very short. There's a link in the chat. You could probably finish it by the time I'm done with my introduction today. Your responses are really intended to improve our programs and elevate your stories. You don't need to be a Farmers Union member to take it, and if you include your name and email, you'll be entered to win a $50 REI gift card. We're raffling off 2 each month, and our October winners are going to be announced on Monday, so get your responses in as soon as possible. If you aren't familiar with Farmers Union, we're a grassroots producer-driven organization. We empower our members to provide leadership in cooperative enterprises and education, and we promote cross-sector collaboration with consumer cooperatives, worker cooperatives, and credit unions. Farmers Union was formed in 1902 with the express purpose of promoting cooperative development. Within a year, the first Farmers Union marketing cooperatives were up and running, including cotton gins, flour mills, and warehouse operations from Texas to Georgia. In 1913, Farmers Union members in Kansas organized an ambitious multi-stakeholder cooperative, the Farmers Union Cooperative Association, and pioneered the farm supply co-op model by forming the Farmers Union Jobbing Association in 1914. In 1929, Farmers Union leaders in Oklahoma organized the first cooperative health service in the U.S., and later in the 1970s, Farmers Union would carry on this legacy by promoting rural health cooperatives using an early model of health maintenance organizations. 1931 saw Farmers Union leaders come together to organize Farmers Union Central Exchange, a predecessor to CHS, which has since grown to be the largest cooperative in the country. Underpinning this remarkable early record of organizing were robust advocacy campaigns. Most notably, in 1922, Farmers Union persuaded Senator Arthur Capper and Representative Andrew Volstead to introduce legislation permitting farmers to act together to cooperatively handle, process, and market their agricultural products. Congress passed the measure, the Capper-Volstead Act, which remains the foundational piece of enabling legislation for farmer cooperatives today. Over subsequent decades, Farmers Union would mount a vigorous defense in the face of attempts to undermine cooperative institutions. This includes the 1979 Save Our Co-op campaign to protect the Capper-Volstead Act and fight against banking deregulation in the 1980s to preserve the farm credit system. Today, our members remain fierce advocates committed to protecting the democratic nature of cooperatives and their unique structure as member-owned and controlled enterprises. You can visit our website, nfu.org, to learn more about what we do and how you can get involved. And with that, I'm very excited to introduce Dan Hobbs, Director of the Rocky Mountain Farmers Union Cooperative Development Center, and 3 members of the Center's team of developers, Connie Falk, Suzanne Mickelson, and George Cheney. I'll get your PowerPoint shared, and once that's ready, the floor will be yours.
All right, terrific. Thank you, Charlie and Emma and everybody. Good to be with you today. Happy Co-op Month. We are the Rocky Mountain Farmers Union Cooperative Development Center. Rocky was formed in 1907, a mere 5 years after National Farmers Union. We are based in Colorado, New Mexico, and Wyoming. We serve a pretty big territory, and we've been working with cooperatives since our very earliest days. And all through those years, many different types of cooperative enterprises have been started by us and assisted by us. And in 1995, we established the Cooperative Development Center. This was brought about by a pretty interesting development within the USDA, rural development. USDA used to employ cooperative specialists. They eliminated those positions and really moved them over to the public and private sector at this time and established what was called the Rural Cooperative Development Grant Program. So these grants have been funding cooperative development centers across the country since '95. And it's just an amazing community of practice. And they are really devoted towards rural areas. And so USDA defines rural areas as communities of under 50,000 people. So that's our primary charge. And we're all responsible for matching funds against those grants, and they are competitive. But this has given us some extra fuel in the cooperative movement in the rural areas. And well, you see our mission statement there. And Charlie, why don't we go ahead and go to the next slide? And thanks for driving the slideshow. Many of us are calling in from pretty remote areas in Colorado and New Mexico with a little bit of limited connectivity. And so I'm going to turn my video off actually here so I can make sure we maintain a good connection. But this old archival photo is really a placeholder for me just to remember all the great cooperators, farmers, ranchers, and land-based people that have preceded us in this work. And so just taking a moment here to pay respects. We celebrated our 100th anniversary at Rocky Mountain Farmers Union not long ago, and we did a wonderful deep dive into the photo archives, which are housed at Colorado State University in Fort Collins. Okay, let's move on. Okay, we're going to open up the cooperative development process here. And I also want to mention 3 of our staff members who aren't joining us in the presentation today. Sandra Baca, our assistant director, Scott Zimmerman up in Wyoming, and Nancy Van Bergel, a retired attorney, recovering corporate attorney, I like to say. So we have an amazing staff, and we work again in Colorado and Mexico and Wyoming, but we've ranged around the country and helped with cooperatives all over the United States. And this is a pretty special group of people, these cooperative specialists. And there you see in the title, we assist groups to understand, start, operate, and improve cooperative businesses. There's a laundry list of skills and knowledge there. Not all of us are proficient in everything, but we have many diverse skills and experiences and knowledge, which helps us be effective in the cooperative development process. In this list here, I wanted to really pull out this part down towards the end of fostering a culture of ownership, spirit of cooperation, and fun. These cooperatives are, of course, businesses. You know, we see a lot of confusion when we first engage groups that co-ops are some type of nonprofit organization. Of course, they're businesses. Maybe part of that confusion comes from the fact that they are really socially oriented enterprises, and we have some pretty serious values and principles that underpin them. And so in this sort of, in this bullet point here, I just want to emphasize the culture of cooperatives and cooperatives cooperating. And I know you recently had a webinar with the Northwest Food Hub Trading Network, and you know, one example of the spirit of cooperation is when those folks were just starting to explore setting that up. I traveled up to Montana actually for a couple of years in a row for the founding meetings of those folks and shared with them the Food Hub Trading Network that we set up in Colorado and New Mexico. And so there's some just wonderful linkages like that all over the country of sharing in this in the spirit of cooperation and the very special culture that we have in the cooperative business community. Madison Principles. Why don't we move on to the next slide here, Charlie? And I'll just spend a quick moment here. The Madison Principles were developed in 1995 by people, cooperative development specialists who were part of the Cooperation Works group. I mentioned these folks before. This is the community of practice of centers, approximately 30 across the United States. And it's basically our professional standards and our ethics as cooperative development specialists working out in the field. So I'll just let folks look at that for a quick moment. There's some really good stuff in here, and we periodically remind ourselves of these high standards by which we carry out our work. And the last point you see there, our vision of the cooperative community is global. I suspect that some of the previous webinars you've held have talked about the 7 cooperative principles. These are international principles that are held. And there's even been discussion of an 8th cooperative principle. I don't know if that's going to happen, but I've heard equity, diversity, inclusion proposed as an 8th principle, and also concern for ecosystems and global ecology. Okay, on to the next one. Okay, into the Cooperative Developers Toolbox. These are some of the most basic tools that folks in our cooperative center have at their disposal when we go to engage groups. We have actually a cooperative attorney who's attached to our staff also and helps with incorporations. And this is important because that incorporation process often is, it seems a little daunting. It's really not that complicated, but we save people a lot of mental acrimony and concern by providing template bylaws and other agreements, which give a real head start to people that are trying to solve problems or take advantage of opportunities in the business space. I often have groups start out with a value proposition, trying to articulate what they're doing, and then we have sample feasibility studies and business plans also. Many of the folks on our team are contractors. We have a mix of employees and contractors, and you're going to hear from 2 amazing independent contractors today, Connie Falk and George Cheney, seasoned experts. Connie, for example, helps us with a lot of our feasibility, business planning, market analysis work. And George Cheney, internationally recognized expert in conflict resolution. Funding and financing connections, invariably very important for a lot of our groups. We tend to work with quite a lot of resource-limited farmers and ranchers, tribal communities, Hispanic communities in rural northern New Mexico. And oftentimes equity from the members themselves is difficult to come up with. And so we end up doing a lot of creative financing and funding to launch some of these rural cooperatives. Okay, let's continue. Now there's some very important preconditions to launch a cooperative. There has to be a real opportunity or a problem that you're trying to solve. And many of us have seen top-down cooperative approaches or initiatives, sometimes started by nonprofit organizations. And many of these seem to have a high failure rate. And so there's got to be something real to do. And there's got to be a proposal of how to do it. This business concept is really the first activity that we get our groups focused on. And then understanding what differentiates cooperative from other forms of doing business. And so we'll often do a survey of how limited liability companies work, S Corps, C Corps, 501c3 nonprofit organizations, so that people can understand the range of business types that are out there. And of course, this member owner benefit principle is one of the central tenets of how you operate a cooperative business. Leadership, gosh, I used to think if you had a good plan and adequate financing, you could do anything. As I got further into this, I understood that leadership was really one of the pivotal things. You've just got to have member owners who are ready to roll up their sleeves and get to work, especially during the early years when these co-ops need vision, need work, need financing, need policies, and they're vulnerable during those early years. So leadership is one of the single most important things. And then commitment to planning and financing and a measured and systematic approach to forming the business. Okay, onward. And here's a nice little graphic that my colleague Sandra made for us. And we're gonna just run through this really quickly so I can pass over the mic to the next presenter. But there at the top, the steering committee is generally where we create something out of nothing, where people bring their ideas and their visions, and we coalesce a group, usually not too big, 6, 7, 8, 9 folks, to work together to establish the business proposal and the vision. And that's that next arrow to the right there, the value proposition. That generally, once there's a consensus there, leads into, if it's a complex proposal, feasibility analysis. Business plans generally flow quite nicely out of the feasibility studies. Then there's the incorporation phase, securing adequate financing, and then finally the launch. And we really encourage people to just give this all the time it needs. One common thing we see is a lot of folks want to rush straight to incorporation and figure this stuff out afterwards, but we advocate for the inverse of doing all the necessary steps before operationalizing the business. Okay, I think that was my last slide, and I pass it over to Connie Falk.
Hi, everyone. I'm going to talk about business plans in general and focus a little bit more on financial feasibility analysis, which is my area of specialty, my special area of expertise. So next slide, please. So business plans are, as Dan said, an essential step in forming a cooperative, and they're necessary for any business, whether it's a cooperative or any other kind of business, whether you're expanding an existing business or you're planning a brand new business. And this is where you're going to determine if the idea really has some legs and is viable. And it will help you secure financing if outside financing is required. There's several major components of a business plan. As I said, the area that I specialize in is in financial feasibility study preparation, but these other parts of a business plan are equally important, especially the marketing study. And you really need someone with expertise in some of the new ways of marketing products and services through social media, maintaining customer lists. You need to decide if you're going to go wholesale or retail, if you're selling agricultural products. You need, in this day, you need to decide whether influences are necessary, whether you're going to use Instagram or Facebook or TikTok. So those are some areas that are very specialized these days and not areas I actually know a lot about. So I specialize in financial feasibility studies, and then your financial plan is where you decide how much of your financing is going to come from debt and equity and what sources of debt or equity. Your organizational plan is where you describe who is going to actually run the company and manage all of the different parts of the company, and are they qualified and trustworthy? Do they have experience? are these people that the members can trust to make good decisions that are going to be hired. And then the executive summary typically accompanies any business plan. There's usually a risk analysis and an industry analysis. The risk analysis sounds like maybe a minor part, but it actually is pretty important. And I've seen cases that I've been involved in where bankers will specifically ask for a risk analysis. And this identifies which variables or assumptions are the key ones to determining whether your business is going to be successful. How sensitive is your business to these key variables? In agricultural, often that could be yields and how susceptible the yields are to changing weather, changing climate. I do recall a case where it was a group of ranchers in southern Colorado who wanted to put in a kill floor processing facility for kosher beef. And one of the key variables there was how many animals actually qualified as kosher. There were certain criteria that they had to meet, the carcasses did, to qualify as kosher. And so that was a key variable that needed to be identified and monitored. So the risk analysis is also a really important part of the business plan. So next slide. So this is my area of expertise, financial feasibility analyses, and I really enjoy doing these. And what this is it's a set of projected financial statements that are linked together on a spreadsheet. And there should be, in my view, the way I do it, is you set them up in such a way that the financial statements are all linked via formulas to the assumptions that you're making about the business. And then that enables you to make quick changes in assumptions and immediately see what the impacts are in the financial projections. And because as you move through the process of figuring out what the business is and how big it's going to be and what your product lines are and what your pricing is and what your cost, your major costs are, as you go through that process, you change some of the assumptions usually as you learn more about what's realistic and what you can assume. So having a spreadsheet that's connected via formulas that facilitates making these changes and seeing the impacts on the financial outcomes, I think that's a really important characteristic of any financial analysis that you might seek to create or have someone create for you. And this maintain fundamental accounting relationship, this may not make much sense to you if you've never taken an accounting class, but what this means is in a financial model where everything's connected via formulas in the spreadsheet, you don't want to have a situation where, let's say, you're expecting to finance the purchase of a piece of equipment. Well, that has reverberations through the whole financial, all of the financial statements. So you're buying an asset, you're creating a debt, you're having impacts on cash flow, you're having impacts on the income statement via interest expense. So all of those integrated relationships need to automatically be reflected in your financial feasibility analysis spreadsheet. And I think also important is you need to have in that spreadsheet the ability to integrate any kind of credit borrowing, whether it's a long-term loan or a line of credit, asset depreciation. You need to be able to carry balances forward from one year to the next, because often you're going to need to do projections for multiple years to show how the business is going to grow and in what year, because it's usually not the first year, what year will the business start to turn a profit, and what kind of financing is going to support the business until profitability begins to show. So those are some of the basics of financial feasibility analysis. As I said, this is the area that I specialize in and enjoy doing and have done for more than 30 years, and ready to work on new projects. So thanks.
Okay, my turn. Excuse me, everyone. Again, my name is Suzanne Mickelson, and I am situated in New Mexico, but I do, of course, work with the full team. But Connie and I are both down in New Mexico, so we like to promote our state, right, Connie?
Yeah, the beautiful states, land of enchantment.
Right. So I'm going to talk a little bit just about capital and financing. We'll start with where we start with all of our groups that we're helping to start up. Most of the work we do around co-ops is with startup co-ops. We do some that's not that's expansion or adaptation of co-ops, including working with excuse me, transitioning businesses from other models into a cooperative model. But a lot of our work is with startup. And member capitalization and member financing are some of the key areas for financing cooperatives. We'll talk a little bit more about why that's the first step as we move through these slides. But member capitalization is really part of the essence of the cooperative model and really creates that ownership and culture that Dan was mentioning earlier on. So there are a few different ways to capitalize through membership. One of the most common is doing equity investment, selling shares or stocks, if you will. And every state is a little different in how this works. So throughout my conversation here, you'll need to reference state laws and state statutes in order to understand exactly how this will work, depending on where you're located. And I will mention, Dan mentioned earlier that we have access to a couple of attorneys that we work with specifically. I really do encourage you to work with your cooperative development center in whatever state you're in, or reach out to us and we'll help you find one, because not all attorneys understand cooperative statute and cooperative structures, and same with accounting. So that's just a key kind of little side note. But usually the member capitalization is very grassroots, often small investments. And that small is a relative term, of course, depending on what type of a cooperative you are embarking on and what the needs are for financing that. But this is usually can be spread out over time. It's a very flexible component of the financing and can be set up in a lot of different ways. So there's a lot of opportunity to make that a feasible model for your member owners. Loans or liabilities is another fairly common practice for capitalizing cooperatives. Again, these are usually larger amounts, and often it's not all of the members, of course, that get involved in that. There is a cooperative in New Mexico, in Los Alamos County, a food co-op that was started and capitalized 100% on member loans and member investments. And it's a pretty neat model, but it's not all that common that you can do it just with that structure. But the loans are usually short-term, quick turnaround, and often have low interest rates. So another opportunity for cooperatives to help finance or capitalize their business is through retention of patronage dividends. And that's, in other words, the revenue that's generated and over and above expenses at the end of the year being reinvested or used for, put into reserves to be used for capital at a later time. There's again, a few different ways of doing this. In some cases, the member retains the ownership of that money. So they're still claiming that, but it's being reinvested and recapitalizing or financing the ongoing operations of the co-op. A lot of cooperatives will, in addition to shares or in place of shares, will assess annual membership fees or dues. And that's another way to help. This is particularly important if you need ongoing working capital and you're not going to be in a position of doing the next thing, which is selling or providing goods or services on a fee-for-service basis. So that annual membership can be a way to generate ongoing revenue if you don't have a revenue stream coming in from some other way. So a lot of times a cooperative, if there's goods or services are being offered outside of the membership itself, if that's available more broadly, they will offer a discount or some other incentive to membership on those fees for service. Next slide. So other kinds of financing, in addition to the member equity, is a little trickier with cooperatives. Cooperatives are sometimes not eligible, fairly often not eligible for conventional business loans, small business loans. There's a few reasons for this that I won't go too much into, but the capital or the equity piece of that, as well as just the fact that you're dealing with a group of owners instead of one or two. The structures can be a little bit complex, and that can make it a higher risk and a little less appealing for a conventional bank or other lender. However, that's not always the case. There are some small co-ops, particularly if you're working with a community bank, if it's a bank that serves a community and they are invested in the mission of the co-op, you might find an opportunity there. There are non-conventional loans. There are some institutions set up specifically to finance cooperatives. NCB, which was formerly called the National Cooperative Bank, makes loans specifically to cooperatives. The North Country Cooperative Development Fund, there's a Co-op Development Fund of New England, and there's some other local ones. And recently there have been some more collectives formed, so it's basically almost a co-op in and of itself that is set up to finance co-ops. And so there are a few of those. CoBank is another a great resource, particularly for helping fund cooperative financial institutions like Farm Credit or credit unions, that sort of thing. And they also will fund energy cooperatives and so forth. Another way to reach out to your local bank is through the USDA loan guarantee funds. There are a few programs out there for that. And those will help guarantee a loan from a traditional or conventional lender that will allow you to access that funding when you couldn't otherwise. There has been a lot of talk in the last couple of years through our cooperative network, the Cooperation Works network, about working more closely with the Small Business Administration and their loan programs. There are some cooperatives that are not eligible for that funding, but we have collectively worked over the last couple of years to try to help educate and inform the SBA more about cooperatives and the cooperative model, and also to help clarify actually their mandate to support cooperative businesses. And then there are other microloan programs out there. So, be cognizant of what your particular mission and industry is, and look to possible industry partners. For example, food co-ops have the National Cooperative Grocers Association. And, there's some other affiliations out there where you might find microloans or community investors. Next slide. Outside investor is another big topic that has gotten a lot of discussion in the past few years. And again, you might find let me preface this by saying you'll need to consult your state statute to understand what's going to be feasible in your state. because the laws vary depending on where you are. And it also varies depending on the industry that you're in. But outside investors in most states, outside investment is a possibility. It's a little harder to find incentive for an outside investor to invest in a cooperative business because by and large, the regulations are such that they are not allowed to have a voting right. So they're non-member investors. And most investors in a conventional sense want to have a say in how the business is operating. And particularly that's true if it is a newly established business and doesn't have a track record. It's going to be a little bit of a tricky sell to get an outside investor to make a commitment. So those are things we would try to help you work through. We would try to find expertise for you that would help you ascertain what might be the right approach for establishing an incentive there. Some of the incentives could be, for example, venture capitalists or angel investors who have a little bit more of a mission towards the cause that you're working towards, and they might be more apt to be supportive and be able to put money forward. And then, of course, grants and donations. Again, Dan mentioned this in the beginning, but one of the things that we stress when we're helping someone start a co-op is that this is a business. And what we don't want is for the group to get distracted with the idea of becoming a nonprofit or incorporating in a nonprofit structure so that they will be eligible long-term to apply for grants and that kind of funding. That's why that business plan that Connie's talking about is so important in that feasibility analysis, so that they can see the long-term potential of generating revenue. But in the short term, when you're in startup phase, any kind of business has an opportunity to access startup grants. And that's true of cooperatives as well. Another sort of, twist on that is the idea of pre-selling like gift certificates if you have a good or service that your startup is going to be offering, or selling certificates of ownership up front, and again having some sort of arrangement for how that will be tracked and managed. The key to that is you need to have a clause in your bylaws that indicates what will happen to those funds should the cooperative not actually form or have to disband early on. And then, of course, bartering or non-cash resources are often utilized in the startup of cooperative businesses. And with that, I think I'm turning it over to you, George.
Okay. Hello, everyone. My name is George Cheney. I'm a retired professor of organizational communication. And for the last year and a half, I've had the great pleasure of working as part of this team with the RMFU Cooperative Development Center. One of the questions that Charlie and others posted to us in preparing this session was about stumbling blocks in the development of co-ops, and then, of course, how to surmount them. And so I had some fun thinking about that and reflecting on cases that I know and also that others have experience with, and put together something of a checklist. And so I'm going to go through that fairly quickly in the interest of time, because I know we want to preserve a segment for Q&A and some interaction. I know that's always said on panels, and it's done less than it's announced, right? But we're going to do our best here. So you see in that first slide, allowing enough time for the strong intra-group bonds, trust, and collaboration. This is extremely important, whether we're talking about a startup co-op, like Suzanne was talking about, or a co-op that's actually being pulled together in a way, and we have some examples of that from recent experience, by a cooperative development center, or a conversion of a conventional business to a co-op. I think it's a step that a lot of folks try to skip over because they think, gosh, it's not very efficient to spend all that time getting to know each other better in order to hammer out basic agreements and things like that. But actually, it can come back to bite you in terms of not, dealing with that effectively. And it can give lots of examples of that, both positive and negative. Giving sufficient attention to market and feasibility analyses. You heard a lot of good information from Connie about that, so I'm going to skip right over that. Seeking out creative partnerships with businesses and nonprofits that can share resources, conduct joint marketing, etc. This is really becoming the norm for a lot of cooperatives today, and we're happy to see it. And what are some of those partnerships about? Well, obviously, some of them involve reaching out to associations like USDA that Dan mentioned, or the National Cooperative Business Association, or the U.S. Federation of Worker Cooperatives. Those are some of the big ones. But also reaching out to some unexpected partners like social entrepreneurship centers that might be in your area, to possible sources of finance, and Suzanne listed many of those, to nonprofits that might be able to assist with one piece or another. Right now I'm working with a conversion to a resident-owned mobile home park in Durango, Colorado, in Southwest Colorado. And they're a great example of how their board has reached out to a whole array of organizations for support, from the city of Durango to various banks, to support organizations like RMFU and ROC, or resident-owned communities, and to other nonprofits that may be helping them with a particular piece of what they're doing. And then ensuring sufficient funding for startup, that in a way goes without saying, but it is so critical. And I would refer you to the various details that Suzanne provided on that. So we could move to the second slide. Reaching clarity about mission, enthusiastic visioning is not enough. I can't emphasize enough the importance of coming up with a succinct, focused and understandable mission statement. So if you're working in the area of agricultural services, for example, and you want to have a co-op that is focused on shared services, then talk about precisely what that means. What services do you expect to be shared, by whom, and toward what goals? And so mission statements are very, very important in that regard, and work hand in hand with many of the documents that you heard Connie talk about. Engaging in sustained business planning. Again, Connie's treatment of that was in depth. Ensuring coverage of necessary skill sets during the foundational stage, relying on both internal resources and outside contracted support. Here it's important to take inventory of the services and the kinds of expertise that you think are critical to establishing or converting a cooperative business, and then making sure that those pieces are put together. And if those pieces, those skill sets, aren't represented, say, by the members of the steering committee and likely staff members, then ensure that you obtain those through various kinds of contracts. And so you want to think about that as a web or a network, rather than just being confined to the particular group that might be involved in founding the organization. And holding realistic expectations for the launch. In workshops about visioning and creating mission statements and things like that, I often like to work in future perfect thinking. What does that mean? think about what you will have achieved at a certain goal, at a certain point, right? Your ultimate goal, and then work backwards from that. So in terms of a launch, then you can say, okay, we hope to launch 1 year from now or 18 months from now. And you set that goal, but then you work backwards from that and say, what needs to have happened along the way in order to make that launch possible? And by doing that, it kind of holds you to realistic expectations, even if later, you need to make some adjustments. So there's one more slide with, I'll go through those very quickly. Working out a decision-making structure that fits the nature, needs, and size of the organization. There's a lot more to be said about this, and this can be thought of as part of the larger business plan, as Connie talked about. But there's a tension in the cooperative world, of course, as there is with many other kinds of organizations, between thinking, we don't really want very much structure, because after all, we're a flat organization, we have egalitarian values, we all get to get along together and so forth. So that's the temptation at one end of the spectrum. The temptation at the other end, as I'm sure you all know, is to over-organize, over-structure, over-bureaucratize. There's a lot more to be said about this, and I have a lot of resources on this, but I'm going to move on. Training is something that should be thought about from the very beginning. And there are really three kinds of training in general. Technical, that's really, connected to the work itself. Financial, and you heard a great deal about that from Connie and also from Suzanne. But then there's organizational training in terms of decision-making structures for the organization, and then how our group's actually going to function. So, and this includes making decisions about key councils or committees that need to be created from the start, and then others that can be added later. The importance of conflict resolution or conflict management, Dan alluded to that earlier. A lot of cooperatives make the mistake of putting that off, precisely because they think talking about it will engender conflict, right? And it's a mistake not to think about that up front and to presume everybody's going to be in agreement all the time. So one great example is the Arizmendi, and this is Arizmendi, named for the founder of the Mondragon Cooperatives in the Basque region of Spain, which is the largest single worker-owned and governed company in the world. But there's a chain of bakeries in the Bay Area, and they interweave conflict management throughout the organization. That is, every member owner receives some training in conflict management. And so it's just a fantastic example of that. And then building in regular self-assessment mechanisms. That is, being reflective about your own practices periodically, not just because you have to at times of audits or big transitions or big decisions, but because it's absolutely critical to effective performance. And there are many good examples of that. One I like to point to is Namaste Solar in Boulder, Colorado, which just does an exemplary job with that kind of reflection and self-assessment. So there you have it, something of a checklist. And like my colleagues, I'm happy to follow up with other resources and answers to questions and so forth beyond today.
Okay, I think we got a couple more slides there, Charlie. No?
Oh, yeah, certainly.
Great. There we go. I'm going to pick it up here, and George and I will finish off together. We're starting to work with worker cooperatives a lot more this year, and we're pretty excited about that. Given our history, working in the farm and ranch space, of course, we've set up a lot of farmer cooperatives, but now we're starting to set up farm labor cooperatives and food processor cooperatives, and it's such an interesting area for us to learn about and also to have some impact in the bringing more values into the food system and into value chains. And so we anticipate a lot of our work in the diversity, equity, inclusion space is going to be with these worker cooperatives. So this is an emerging group in Southeast Colorado. Okay, let's move on to that next slide. Okay, I'm going to just tick off a couple of these really quickly. I mentioned my colleague Sandra Baca before. She's our champion of our diversity, equity, and inclusion work, and we are really excited to be figuring out how to put some of these values into practice. And so we're designing what we're calling a deep dive workshop. It's going to, probably be a half a day or longer workshop that's going to talk about institutionalizing some of this work into the cooperative structure, policies, founding documents, et cetera. So that's something that we'll be tackling in 2022. Let's see, the more network type cooperatives, that's pretty self-explanatory, but I will just mention there, we are primarily rural facing, but we are increasingly going into these urban areas and doing cooperative development work because, of course, this is places where there's workers and markets and there's reasons to work in the urban areas too. So we're really working a lot on this, so-called urban-rural divide. And moving into new task areas, gosh, this housing question and land access to irrigated land in the dry country are weighing heavily on our minds. We're basically in sort of a crisis mode, I would say, on both. In much of the rural West, the housing situation in particular is just nuts. And so we found ourselves quickly getting up to speed and becoming housing cooperative experts. And recently, this last year, with George Cheney's leadership, working with a mobile home farm park in Southwest Colorado, and then building partnerships across sectors. This includes, of course, government, private sectors, but also very importantly for us in the Southwest with tribes. Over to you, George.
There we go. Thanks, Dan. Yeah, we're also, as many organizations are today, looking into other focused grant opportunities. And I'm not going to list those right now, except to say that due to the various crises, interrelated crises, the pandemic and other things, of course, there are new federal programs, for example, under the Economic Development Administration, American Rescue Act, that are quite relevant for cooperative development. Contributing further to the cooperative knowledge base through new publications, we are working on a cooperative literacy guide that will be practical and have a modular structure with lots of cases and adaptation to different geographic areas. And then finally, working jointly with other organizations on popular messaging about cooperatives. Interestingly, there are a lot of groups that have formed in just the last few years around the country dealing with communication about co-ops, because as we all know, the stereotypes about co-ops persist, and the marginalization of co-ops, for example, in business curricula and community workshops and so forth persist. So there is need for a lot more popular messaging, and early evidence from the International Labor Organization and the International Cooperative Alliance shows there is rising interest around the world in cooperative and related structures. So the time is ripe. And with that, I want to thank Charlie for all the great work in pulling this together, and turn the floor back to you. Thank you.
Thank you, guys. And I think we're going to have you back because I have a lot more that I want to discuss and ask you. This has been a fantastic presentation. I just maybe have time here for one quick question that came up in the chat, and if there's anything else that you kind of want to tack on in addition to this. But the original question is, do any of your cooperative development projects include bylaws creating a membership checkoff to the host farmers union organization? And maybe along with that, if there's anything else you just would want to add about maybe how you bring folks into the fold of farmers union, or how you kind of connect them with farmers union through your work, that'd be awesome too.
And I just want to say, Dan, in case you didn't see the chat, that question came from our own Mr. Bob.
Oh, good. Yeah, that's a good one. In fact, we had one of those with the Mountain View Harvest back in the mid '90s, and it's a practice that we have not continued, but it's worth reviving, and it's a great reminder. I also saw a question about, I think it was common stumbling blocks, and this was before George's remarks. So hopefully some of that was answered. But another common thing I would just add to that really quickly is we see a lot of these groups with inspired groups with too many ideas that they are trying to implement too early, and so there's a lot of trying to encourage folks to simplify and really focus on that core business before reaching too far afield.
And I would love to just add to that too, Dan, if Charlie, if you don't mind, if we have time.
Yeah, absolutely.
Dan covered the importance of the leadership component and the need for strong and skilled leadership. But one of the things that we didn't really talk a lot about today was the importance of good management, and that's of course important in any kind of business. But this is particularly challenging for startups because a lot of times they don't have the financing or the funding to pay a paid manager to hire someone and pay them well up front. And it's just hugely essential that be addressed in the feasibility analysis and the planning and in the financing of the co-op. And that's where some of the grant funding and things might come in to help, but it's really important that you have someone who can take on the day-to-day tasks of moving the business forward.
Great. Well, thank you to our presenters. I'm going to jump into a couple very quick wrap-up slides here. This has been awesome. I'm not kidding about bringing you guys back because I have a whole list of questions written down on my legal pad here. So yeah, we'll have to talk. One quick plug, registration opens Monday for the 2022 NFU Women's Conference. We'll have both virtual and in-person options this year. I highly recommend that folks check that out. As always, there's also now an evaluation link in the chat. Forgot to mention this. Really, please, folks, if you have a minute, take our evaluation survey. We really read these closely. If you have questions that we didn't get to, we'll follow up on those. If you have ideas for future programming, if there's ways we can be more inclusive or make our programming more accessible, we want to hear them. We'll act on them. Yeah, we just really appreciate that. Just wanted to close by saying thank you everyone for all your support throughout this co-op month. We really appreciate everyone who's tuned in for the series, watched the recording, read a transcript, shared a link. It means the world to us. We think this work's really important. That's why we continue to highlight things like what the Rocky Mountain Farmers Union Cooperative Development Center is doing. Our prior two webinars are up on the NFU YouTube channel now. You can also visit nfu.org/connect to get updates on our work in cooperatives and beyond. And I'll be sending out more information just as a follow-up to this webinar with the recording, the transcript, some of the links and things like that came up in the chat. I think with that, hustling, 3 o'clock, that's all I have. Thank you again to the Rocky Mountain team. This has been awesome. And thank you again to everyone who tuned in.